Everybody, and welcome to this another episode. And in today's session, I want us to discuss about support and resistance and why you keep failing. So if support and resistance worked the way most traders draw it, then price wouldn't keep stopping you out and reversing without you. So the problem isn't the market, it's how you have been taught to see the levels. And in this video, I'm going to show you a different way to look at support and resistance in order to be able to increase your trading probability, or to increase your winning probability. And this is the secret, that support and resistance, not really the secret, but this is where problems start coming in, because most of us, support and resistance as one of the first things that traders learn. The moment you came into forex trading, I think the first strategy that you are taught is support and resistance, the trend lines and such candlesticks patterns and all that stuff. Okay, and support and resistance being one of the first things that traders learn, it's also one of the biggest reasons why they stay stuck. Because most traders, they draw lines and expect price to respect them perfectly. But what you need to understand is that price doesn't respect lines, it seeks liquidity. And this is, you can see these are from the chart. So I'll just illustrate this from the chart. So you have seen that traders basically, let's use this example. You find that most of the traders, they are taught to draw lines like this in areas of support and resistance. Okay, so but now what you need to understand is that the price doesn't respect. What you are saying is that the price, it doesn't respect these lines perfectly. What it does is that it seeks liquidity. So the best way to draw this is basically by looking at it in terms of zones. So from today henceforth, let's avoid drawing lines and also mark these as zones. Okay, so you can have the entire of this as your support, I mean as your resistance level. Okay, because what we said, if you draw lines, what happens to instances like these when the price comes out to seek liquidity? So you have to factor, now you have to stop drawing lines. All right, you have to stop drawing lines and now draw them as zones, as you can see in that particular manner. Okay, so if you also look at it at this particular point, so we can have this like that. Okay, so we can have it like that. So that's a resistant level. Okay, that's a resistant, I mean that's a support zone. Okay, so that's a very nice support zone. Actually, we also have this other one here, like that. Okay, so that's also an entire support zone. Like you can see, the price came here the first time, it came here the third time and the fourth time, and then we see price bouncing off. So one of the secrets that I'll give you when you want to draw support and resistance, of course you want to look at this kind of a scenario where the price is consolidating like that. Okay, so we have those instances, such kind of things. All right, so such kind of scenarios, like that. So what you want to do is, you see in this case scenario, if you come and draw lines here, these will not really work well for you. So the best thing, because you can see these instances when liquidity is being taken out. Okay, so the best thing is for you to draw like that as a zone. Okay, so the best thing is for you to draw it as a zone, right, like that. And it can just be there because this is where we have the most number of touches. Okay, so it's not a must that we have to push it down to factor this level. No, we are looking at the one that has most number of touches, right? And on this other side as well, this one we can have it like that, right? So that is the support. So this is resistance, this is support. Okay, and what you will understand is that what I'll be explaining in this video is that I will be explaining why support and resistance keeps failing and how to start seeing these levels the way the market actually uses them. So this video is for traders who draw clean levels but still get stopped out, feel like price respects the levels only after they exit, think support and resistance is unreliable, or are constantly confused by fake breakouts and reversals. So if levels feel inconsistency, then this video will fix the framework, right? And here's the truth that I'll tell you, that support and resistance are not decision points, they are areas of interest. Okay, so what you are seeing here, these are not decision points, they are areas of interest, right? They are areas of interest because price does not react because a level exists. Price reacts because of what sits in that level, and what sits in these levels, they are liquidities. Okay, they are liquidities, right? And the reason why I've illustrated, if you draw like maybe probably a line like this, right? So you see there are some instances where the price comes and takes out those liquidities. When you draw, even here you draw maybe probably a line like this, right? So you see there are instances here the price is coming to take out these liquidities. So the reason why we are saying that price does not react because supports and resistance levels exist, it reacts because of what sits around those levels of support and resistance, and what sits there is liquidity. Okay, so I'm going to give you, or we are going to discuss why traditional support and resistance fails. And you realize that most traders, they were taught to draw a line at highs and lows, like this scenario. These are lows, you draw a line. These are highs, you draw a line. So that's how most of the traders were taught. They were also taught to buy at support, right? To buy at these levels of support. They were also taught to sell at levels of support and to place stops beyond the line. So if this is the line here, then to place their stop losses here. If this is the line here, then they were told to put their stop losses above that particular point. Okay, and that basically creates predictability, right? And predictability creates liquidity. So what happens when thousands of traders place their stops, right? When thousands of traders come and place their stops maybe at that particular point, okay, this particular level here, they place their stops there as they were taught. Okay, and maybe probably another trader comes and sells here and put their stops there. So what happens, you realize that the price comes, right? The price comes and they are stopped, right? And the trade goes in their direction. In this case scenario also, the price comes, they are stopped, and the price goes in their direction, or it goes in the other direction. All right, so the reason why you always find that the price taps the levels, ships the stops, and then moves in the original direction because they have already been taken out, right? So this other side as well, the price taps the level, right? Then it sweeps the liquidity, and then the price, they are stopped, and then the price moves in their original direction, right? I believe now you're understanding. And these are some of the things that traders call manipulation, whereas this is not manipulation, but it's liquidity collection. It's a liquidity collection. So the moment you understand the concept of liquidity, and then now when you're trading support and resistance, because you have said these are not decision points, they are points of interest. Therefore, you need some confluences. Not only are you going to trade support and resistance in terms of making your decisions, but you are going to use them as points of interest, whereby you need some extra confluence. Okay, so you realize that the price often needs to violate a level so that it can move properly. Right, if you have really checked the market, monitored or checked how really backtested how the market moves, it has to violate a level so that it can move properly. And the failure isn't the level, right? It's the expectations that price must respect it cleanly, because that's the expectations that we mostly have as retail traders, right? And now let's discuss the real purpose of support and resistance. You realize that support and resistance should only answer one question. Okay, note from today that support and resistance should only answer one question: where is liquidity likely resting, right? So avoid looking at support and resistance to answer questions like where should I enter blindly, where will price bounce perfectly, but instead start looking at where are stops likely placed, where are the breakout traders trapped, where might institutions seek orders. Those are the kind of questions that you want to ask yourself, because levels show interest, not certainty, right? Levels will show you interest and not certainty. So once you understand that, then you stop entering early and start waiting for confirmations. Okay. And what are these kind of confirmation? How I put it is that I've always mentioned that we don't buy at support, we don't sell at the resistance. Or else, well put, is that we look to buy at support, we look to sell at resistance, we look to buy. Right, you can hear my wordings. We look to buy, we look to sell. Why? Because it's a point of interest. It's not a decision point. Therefore, we need some extra confirmations. All right, and traders here can use different confirmations. There are those who are going to use candlesticks patterns, rejection candlesticks patterns. For instance, when you're trading, maybe you're looking at support level, you want to look at confirmation using candlesticks patterns like from support level, we want to look at candlesticks patterns like the bullish engulfing, the bullish pin bar, and the dragonfly doji. So if you are also looking at maybe selling at a point of resistance, here we want to look at candlesticks patterns like the bearish engulfing, the bearish pin bar, and also the gravestone doji, mentioning those some of the rejection candlesticks. If you use pure price action, then you want to confirm using maybe probably a change of character or a shift in market structure. Okay, so that is very, very important. There are also traders who maybe probably don't know how to identify the breakouts and the fakeouts, and I will briefly explain why breakouts and fakeouts happens. And when I'm doing this, basically I want to clear this perspective that maybe probably the price is manipulating or the broker is manipulating the prices. Okay, you need to understand breakout fails because they trigger, right? They trigger breakout traders, they trigger stop losses, and they provide liquidity. Therefore, price often needs to break resistance to go down. Okay, so there'll be that fake out that the price will likely maybe probably throw a week at resistant level, right? Throw a week, maybe probably like that. And then we see the price pushing on the downside, right? Because they will trigger the stop losses and they provide liquidity. So when they're triggering the stop losses, where the retail traders stop losses are, that's where we have institutional orders pending. So your stop loss will be hit, and then now the institutional orders will be activated. Okay, so and this isn't basically deception. We can't call it deception, but it's mechanic. The reason why you really have to understand the mechanics in terms of how the price moves. So support and resistance are not walls, they are magnets. I might call them magnet. They are not walls where the price will hit and bounce. All right, they are basically magnet. So price is drawn to them, then decides what to do after liquidity is collected. So it can either now break out or it can form a fake out, right? So you have to really be cautious. And the reason why we are waiting for confirmations, all right? The reason why we are waiting for confirmation, so that now we can be able to avoid these supports and resistance, all right? So here is how to use supports and resistance correctly, right? And here is the correct framework that I'm going to share with you. Okay, so going forward, avoid drawing lines and draw zones, because like you have said, these supports and resistance, they are zones. All right, so expect price to violate those zones. Don't be static that you'll be looking at the price maybe respecting these zones. No, have that expectation that the price will violate those levels. Why? Because if you have that perception, therefore you'll want to wait for a confirmation. Okay, so before you jump in, before you enter the trade too early, you have to wait for confirmation. So wait for reaction, not touch. Because some of the people say that most of the traders, especially newbies, they say the moment the price touch supports, we are buying. The moment the price touches resistance, we are selling. So what I want you to do henceforth, wait for reaction and not touch. Reaction is by now the price, you want to see how the price reacts within that zone. Is it a breakout? Is it a rejection? Okay, so use structure and timing as confirmations, right? So you use the correct, the prevailing market conditions, the prevailing market structure. So you use it as a confirmation, and also the timing. What do I mean by the timing? I trade ICT, so I always take trades using the kill zone, within the kill zone windows, all right? So as well, you can, if you're not using ICT, you can also look at the sessions that you're trading. If it's GBP, JPY, what business do you have for it in the New York session? It's not really, GBP is not active in New York session. JPY is not active in New York session. So these are pair that you can trade. It has more movements in the London and also the Asian session. Okay, so think where are the stops, not where is support. So if you look at these as your support level, where are the stops likely to be? Of course, in these liquidity zones, all right? And the reason why now you really need to have your stop loss below the support level. If you're looking at the resistance level, where are the liquidities likely to be? Above these highs that you can see here, all right? In these highs that you can see here. So the reason why now you want to position yourself and have your stop losses above, slightly above the zone of resistance, okay? So when you use it this way, then stop out reduces dramatically. Not that you'll not have, you'll not be stopped. Not that your stop loss some will not be hit completely. So this reduces the chances of you being stopped out. Okay, so you really need to understand that. So when you come now to the real market, as you can see, if you drew a line like in this level, already here you are taken out. Okay, if you consider this, you can see the price comes and takes you out, right? At these particular levels the price takes you out. But if you draw them as a zone, like in this case scenario we have here, so like that, therefore you see the price, you're not taken out. So the price comes, respect that level. Of course, you have first retest, second, third. So you begin looking at selling opportunities here, all right? Potential sales here, and you see there is no instant that you're stopped out. Okay, so let's look at another example. Maybe let's see. You see, like in this case scenario here, so if you come and draw a line in this perspective, what happens here is that you will be taken out, right? You will be taken out. So the best thing to do is to draw this as a zone. All right, so you can draw this as a zone like that. Okay, so you can see as a zone like that. So I'm looking at this level, all right? I'm looking at that level and also factoring all the way to this level, because we want to have the most number of touches. So this is resistant, right? So the price comes first, second, and then now you see the third time when the price comes into that particular level. So we have that. Okay, so you have your nice cells, and when you look at here, these are the bearish pin bar that we are talking about. So they show rejection, so you have to wait for those confirmations before now you take that particular trade. When you look at it also in this case scenario, so here, if you draw a line, right? If you draw a line, because you have the first, second, and third, so if you start selling here, so you realize that sometimes you'll be taken out, because you can see where the price draws that particular week. So for me, instead of drawing now the lines here, this support level, what you can do is mark it as a zone, right? Mark it as a zone. Okay, so, and you can see once you mark it as a zone, it really gives us a very nice entries. You can see when you push it even to these particular levels. All right, so it's a very nice support and resistant, right? It's a very nice support and resistant. So from today, let's avoid marking the lines, and we start marking them as zones. Okay, so, and initially myself, actually, what I used to do, I used to blame myself, and also I used to, not really myself, but I really used to blame the broker, um thinking that the broker is doing some stop hunt or some manipulation. So what I didn't realize is that my entries were predictable, and we have said that predictability is exactly what the market feeds on, right? Because the market makers, they know how retail traders think. They know that the retail traders will draw lines here and put their stop losses below those, slightly below those lines. So they'll come, take them out, and the price goes in the direction, right? So avoid being predictable as per se. Okay, so because market really feeds on those predictability. So, and the moment I really understood that supports and resistance are not zones, I mean, they are not lines, they are zones. And also I understood the aspect of the fake outs and the breakouts and the fake outs. Therefore, I was able to align myself accordingly, and also coupled now with the idea that supports and resistance, they are not decision points, they are points of interest, right? They are points of interest. So I had to look for extra confirmation for me to be able to maybe probably act to make decisions in supports and resistance. Therefore, I had to have extra confirmations like the candlesticks patterns that I gave you, like the change of market structure that I just shared, right? So if you look at the change of market structure, maybe let me give this a quick example here. The price was pushing down here, and then at this particular point, this was the major high here. So the moment price went above that level, you have a change of character. And the reason now when the price comes to this level, it's now coming to retest at this particular order block. So you can see this is a support level, but I'm not using this support level basically to make my buying decision. No, I am looking at it in this way. I have seen a change of character. So this is my order block, right? This is my order block lying within the support level. You see the confluence now? Then the price comes to my order block, and therefore I take the trade for a buy. Right, so here I'm not using supports and resistance as decision points. Rather, I'm using support, resistance, or I'm using this support level as a point of interest. Okay, as a point of interest. So I have to look for extra confirmations so that I can be able to engage at that particular level. And the moment I now started thinking that way, I stopped treating these levels like magic lines, and that's where everything changed about support and resistance. Okay, so as we lock it in, so this is what I'll say in summation: that support and resistance, they don't fail. I mean, support and resistance doesn't really fail, but blind execution is the one that fails. Levels will show you interest. Liquidity is what drives reaction. All right. So, and the reason why now confirmation creates an hedge. I'll repeat: levels will show you interest, liquidity will drive reaction, and confirmation will create an hedge. So stop trying to predict exact turns for the price and start waiting for the market to reveal the intent, right? Wait for the market to reveal the intent. So I believe you really got some nuggets in terms of trading support and resistance. And in the next video, we'll be building on this and talk about how to identify high probability trade zones, because not all levels are equal. And knowing which zones matter is what separates guessing from prediction. So see you in the next one.